Good morning to you all and welcome to this Sustainable Finance Regulation Series webinar. This is a series of webinar done by ECOFACT and AMAS. We're very happy to have you here today. Today we're with Tennessee and Núria, who will start with an overview of the evolution of sustainability disclosures under EU law. I'll then give you a quick view on the ordinance and climate disclosures on the Swiss side, and as always, we'll have a time for questions and answer at the end of this webinar. So thanks to you all to be here, and Núria, the floor is yours.
Thank you, Guillaume, for this very warm welcome and introduction. So yeah, today, Tennessee and I from ECOFACT, we will walk you through the latest developments in the EU regulatory landscape when it comes to ESG and sustainable finance. And first of all, we will talk about the latest updates in the SFDR regulation, then also the EU taxonomy, and finally we'll cover the CSRD, ESRS, and the related standards. And then, as Guillaume said, we will also have an overview from AMAS side on the ordinance on climate disclosures. So if we start with the SFDR updates, we first, of course, need to know where the SFDR comes from and where do we stand now. So the SFDR comes from the EU Action Plan on Sustainable Finance, which was issued in March 2018. And this is a sustainable finance plan from the EU. It has 10 objectives and 22 planned actions, which can be summarized into 3 big themes, which are to reorient capital flows towards sustainable investment, to mitigate the impact that climate change and social and environmental issues can have on the financial system, and to increase transparency and long-termism in the financial world. From this action plan, there are 3 key regulatory outputs. The Sustainable Finance Disclosure Regulation, which we will discuss today, the Climate Transition and Paris-aligned benchmarks, or the benchmark regulations, which we will not discuss today, and the Sustainability Taxonomy Regulation that we will also touch upon later on today. The EU Action Plan, as I said, was issued in March 2018, and in 2021 there was a plan or a new strategy that was released in order for it to be fit for purpose and to continue the work that the EU is doing in the best way possible. So there was a bit of a change on the initial plan. So that's where we come from, and that's it for this very small introduction on the EU Action Plan and how these regulations that come from the EU fit together. And now we will enter a little bit more into the SFDR and more specifically the regulatory technical standards. So the way the SFDR works is that we have the level 1 regulation, so the main text of the EU SFDR, and then we have the level 2 regulations, which are the regulatory technical standards, which provide additional detail on the content, methodology, and presentation of certain disclosure requirements under the SFDR and under the taxonomy regulation. It has 5 annexes, and they provide mandatory disclosures for the principal adverse impacts, which probably you've heard of, the pre-contractual disclosures for Article 8 and Article 9 products, and also the periodic disclosures for Article 8 and Article 9 products. If we move forward to the next slide, in the past few months, or specifically last month, there were a lot of developments when it comes to the SFDR. So first of all, we had some questions that were published by the Commission, where they were replying to the questions that the European supervisory authorities asked in September 2022. There are plenty of these Q&As issued by the Commission, but also by ESMA and the European supervisory authorities, trying to make sense of the SFDR regulation and also of the SFDR RTS. And this is the latest, which was published in April 2023. It brings a bit of light after the entry into force of the SFDR RTS the 1st of January of this year. So yeah, financial markets participants have in general appreciated these questions, also due to the fact that they are not very prescriptive. And so there are definitions that are very much open to interpretation, and therefore the Commission confirms that the SFDR is a disclosure regime, and it emphasizes that generally firms need to disclose what they do and the way that they do things. So for example, when it comes to the definition of sustainable investment, they specify that there's no prescriptive methodology to determine contribution or to determine the minimum requirements around what a sustainable investment is. So there's a need for firms to disclose the way they interpret these and how they approach their definition of sustainable investment. So that's good because it leaves a little bit of leeway to concerned firms to define what's their approach and what's their ambition. The only restriction that this Q&A puts is that a transition plan alone is likely not sufficient to be a sustainable investment. So a firm or an asset or a company behind a portfolio that just have like a transition plan would not qualify as a sustainable investment. Otherwise, the definition is quite broad and firms need to disclose exactly what they do. Then we also got some clarifications for Article 9.3 funds. So those are financial products that have an objective of reduction of carbon emissions or of reducing carbon emissions. So here again, the Commission is not very prescriptive with very tight definitions. So Article 9.3 products can adopt either an active or passive investment strategy. And there is no requirement for Article 9 products or Article 9.3 products to track a Paris-aligned benchmark or a climate transition benchmark. However, if these benchmarks are not tracked, they should explain why. So again, it's very much a disclosure regime. And then if a fund tracks one of these benchmarks, it's automatically deemed to be making a sustainable investment. When it comes to the principal adverse impacts, the Q&A also offered some clarifications. So firms that consider principal adverse impacts in their products, they need to disclose how they consider these principal adverse impacts. And here the clarification, they also need to disclose the procedures put in place to mitigate those impacts. Again, the SFDR or the Q&A does not prescribe what are the acceptable mitigation measures, but firms can decide this by themselves. So again, there's a lot of leeway for interpretation. Then we also got some clarifications when it comes to the periodic reporting for portfolio management firms, specifically MiFID portfolio management firms that offer MiFID portfolio services. So they are only required to provide Annex 4 and 5 of the RTS. These are the periodic reporting templates on a yearly basis or annually. And finally, the employee threshold for entity level PAI disclosures. So the threshold is 500 employees, and the question was related to whether secondees or contractors or group employees should also be included in this threshold. So if they should be included in the 500. And the Commission does not really answer this question, and it leaves the definition of employees to national law. So it would depend on the national law of every country on whether you consider secondees as employees or contractors as employees or group employees also as employees in order to issue this PAI statement. So that's it for the questions that the Commission answered last month. Also, last month it was busy when it comes to the SFDR. So the ESAs, the European Supervisory Authorities, also proposed amendments to the SFDR RTS. These amendments, they are the response from the Commission's request for a review of the RTS. And so, yeah, last April, the European Supervisory Authorities, they published this consultation paper suggesting some amendments. What are some of these amendments? Basically, they deal with the PAI indicators, with the do no significant harm assessment, and the pre-contractual periodic and website disclosure of greenhouse gas emissions reduction targets. So when it comes to PAIs, we have new mandatory social PAIs indicators that are proposed. For example, some of them would be the share of employees earning less than the adequate wage, or exposure to companies that are involved in the cultivation and production of tobacco. Then we also have some new optional social PAI indicators. That would be, for example, not having enough people with disabilities within the workforce, or the lack of grievance or complaints mechanisms for communities affected by the operations of the investee companies. It's important to know that these new social PAI indicators, or these new proposed social PAI indicators, are largely based on the ESRS, so the European Sustainability Reporting Standards that are being developed in the context of the CSRD. And Tennessee will touch upon these topics a little bit more in detail later. But this shows a little bit that the EU is trying to make these regulations interoperable, and that they all fit together, so that the SFDR RTS fits together with the taxonomy, together with the CSRD, and that it's harmonized for all the market participants or firms that are in scope. Then to finish with the PAIs, the ESAs have also proposed some amendments to the existing PAI indicators when it comes to methodologies or calculating these PAIs. When it comes to the do no significant harm assessment, Article 8 and Article 9 products would include detailed information on quantitative thresholds used to assess the significant harm to other PAI indicators. So it would go a little bit more into details and have thresholds. And when it comes to the disclosure of greenhouse gas emissions reduction targets, additional pre-contractual disclosures, periodic disclosures, and website disclosures would be required for Article 9 and Article 8 products that have greenhouse gas emissions reduction target. And the ESAs also propose to have a mandatory metric to disclose these targets, which would be greenhouse gas emissions expressed in tons of CO2 equivalent per million euros of investments. And firms will also need to use a mandatory or need to use the PCAF, the Partnership for Carbon Accounting Financial Standards methodology, to measure the emissions and to set greenhouse gas emissions reduction targets. So that would be it for the ESA's amendments. So the main takeaway is that there would be a revision of the PAI disclosures and product disclosures. There would be a revision of how to categorize Article 8 and Article 9 products because of the changes to the do no significant harm test and the PAI indicators. And entities in scope would also need to provide detailed disclosures of any product level greenhouse gas emission targets. If you look a little bit on what's next for the SFDR, we can see that ESMA during last year and this year is assessing and will continue to assess how the EU sustainable finance legislation is consistent. We see that every time we have more, the regulations fit together more and more. but they will continue to do so, and they will also work to converge the application and supervision of this regulation and legislation with the national competent authorities. Also in June this year, we will have the first PAI statement that will need to be issued together with the different calculations of the different PAIs. Also, we don't have a potential date for the ESAs to submit the results of the consultation paper that I just mentioned before, but potentially the ESAs will submit the report to the Commission with the suggested SFDR RTS changes in Q3, Q4 this year. The consultation on these ESAs amendments or proposed amendments is open until July 4th. So yeah, this would be a reasonable date, but with the EU, we never know. And yeah, we will see. It's expected for the moment in Q3, Q4. And yes, also in 2024 June, there will be the new PAI statement that firms will need to issue again with the calculation and the disclosure of the calculation of the PAIs. And if we move forward, we will talk a little bit about the EU taxonomy updates. So first of all, again, to give a little bit of context, what's the EU taxonomy or what are taxonomies in general? So taxonomies are classification systems that define economic activities that can be considered for sustainable financing. And over the past 2 years, starting with the EU taxonomy that we will discuss now, we have witnessed an increase number of taxonomies being developed around the world. The EU being a front runner, but also we have initiatives in Canada. We have the first taxonomy in Latin America, in Colombia. We also have some proposals in Asia, in Australia. So this is something that is being developed around the world, but still the EU is the most prominent one. And it's a tool basically to help investors, companies, and issuers and project promoters to navigate the transition to a low carbon, resilient, and resource efficient economy. The EU taxonomy entered into force in July 2020, and it defines 6 objectives, which are listed here in the slide: 2 climate objectives and 4 environmental objectives. The first 2 climate objectives were already published in 2021. And the environmental objectives are the ones that are being developed now. So we had a proposal also last month around the technical screening criteria. So really the definition of the activities that would be considered as environmentally sustainable, and under these 4 objectives, which are sustainable use and protection of water and marine resources, transition to a circular economy, pollution prevention and control, protection and restoration of biodiversity and ecosystems. So how does it work for an activity to be considered environmentally sustainable under the EU taxonomy? So it needs to be an activity that is one of environmental or climate objective as defined in the EU taxonomy. It doesn't have to significantly harm the other objectives of the EU taxonomy. It needs to comply with the minimum safeguards, those being, for example, the OECD guidelines, and they need, of course, to fulfill the technical screening criteria defined by the EU for each of the objectives. And if we move forward to the next slide, we have a little bit more visually presented what are the objectives of the EU taxonomy regulation. So we have the climate delegated act, which defines the technical screening criteria for climate change adaptation and climate change mitigation. And then we have the 4 environmental objectives that are being developed now by the EU. So as I said, between April the 5th and May 3rd, so it already closed, the European Commission held a consultation on the draft delegated act with technical screening criteria for the remaining 4 objectives under the taxonomy regulation. So those are the 4 environmental objectives, and also a consultation on a draft delegated act that would amend the existing taxonomy climate delegated act. So that would amend the activities under the climate change adaptation objective and the climate change mitigation objective. And if we move forward to the next slide, we have here a little bit more in detail what are the proposals from the European Commission. And if we look at the remaining 4 objectives or the environmental objectives, we can see that the Commission has proposed activities related to manufacturing, water supply, waste management, civil engineering, etc., etc., etc. These are, of course, drafts, and the consultation closed, so they can change. And due to time constraints, the Commission did not propose climate adaptation criteria linked to the environmental related activities. So the Commission aims to develop this in the future. The Commission also mentioned that more assessment and calibration of criteria will be needed for agriculture, forestry, and the fishing sectors, as well as for certain manufacturing activities. And yeah, the Commission also said that they have prioritized and they will prioritize developing the technical screening criteria for economic activities and sectors with the greatest potential to make a substantial contribution to one or more of the 4 environmental objectives. So as you see, this is a very first draft, but there's still a lot of work to be done by the EU Commission and the ASAS and the Platform on Sustainable Finance. So it's a good improvement, but still it will need to be developed. And when it comes to the Climate Delegated Act, that is also, or that was also consulted by the Commission. Yeah, so the Climate Delegated Act or the draft amendment to the Climate Delegated Act would add climate adaptation and mitigation technical screening criteria for additional economic activities. And these activities concern mainly activities in the transport sector. It's also worth noting that this Climate Delegated Act was already amended in March last year, so March 2022, by the Complementary Delegated Act, which added technical screening criteria for nuclear energy and natural gas as transition activities. So yes, again, this was open for consultation, and we will see how this develops in the next few weeks and months. And if we move forward to the next slide, we have a little bit of a timeline on how this will enter into force potentially if everything follows the course that the EU has planned and there are no delays. So the idea is the delegated act, both of them, the amended ones for the climate related objectives and the new one for the environmental related objectives, enter into force or are ready to use in January next year. That would mean that from January next year until December next year, non-financial undertakings will be required to disclose their taxonomy eligibility. From January 2025, non-financial undertakings will also be required to disclose their taxonomy alignment. And at the same moment, financial undertakings will be required to disclose the taxonomy eligibility for their assets or for the assets under their portfolios. And in January 2026, financial undertakings will be required to disclose their taxonomy alignment. So that's the preemptive entry into force of this amended Climate Delegated Act and Environmental Delegated Act. But we will see if this is the final timeline or not, as this is being developed. And that would be it from my side. So I will give the floor to Tennessee, she will talk a little bit more about the CSRD and the ESRS.
Yes, thank you. Thank you, Núria. Also, good morning from my side. So we will now jump into the CSRD and the European standards and also to the other standards afterwards. So as you may know, and as a quick introduction, we can see that the CSRD was finally approved, adopted and published at the end of 2022. And it then entered into force in January 2023. So the CSRD, the Corporate Sustainability Reporting Directive, is the new NFRD. It's the new non-financial reporting. It's the latest version of the non-financial reporting directive in the EU. But as of now, and as it has not been transposed yet by the European member states, the NFRD continues to apply. So member states now have to transpose the CSRD. Some member states started without any surprise. We have two proposed law by Spain and France, and the other ones may come soon. And the implementation of the CSRD will be gradual. So it will be we have a few deadlines for the companies, and the different deadlines will be dependent on the size of the company, if this is a company based in the EU or not, and if this is a company that is already addressed by the NFRD or not. The main differences, and this is the table in the slides, the main differences between the NFRD and the CSRD. The main one is an increase of the scope, an increase of the disclosures, and an increase of the addresses. So if you watch the addresses, so with the NFRD, it was only large EU companies, where now with the CSRD, these are large companies and listed SMEs, EU-based companies, but also non-EU-based companies. So really an increase in terms of addresses. Also an increase with the scope of disclosure, where now the CSRD tackles really the subsidiaries, the supply chain, and the whole value chain. Some exemptions still remain, the same one remains, and in the CSRD there are also some exceptions. While you have to implement, especially when you're a non-EU based company, then you have different possibilities on where to report, how to report, at least for the first years, and then it will all be aligned. In terms of format, so there were no specific format in the NFRD, there were some guidelines, but no specific format, where the CSRD will define a format to be defined in the coming months. And they also mention an electronic reporting format, and they are also working in parallel to on the ESAPT, so the European Single Access Point, where all this electronic reporting format will be included. And last but not least, the audit requirement was not included in the NFRD, but is in the CSRD. So also the non-financial information will soon be required in the EU, or for the addressed company, because now we cannot say only in the EU. The CSRD refers to an European standards to be developed and to be implemented for the addressed companies. And so the EU Commission mandated the EFRAG, so the now I have it up on what is the EFRAG, but the EFRAG is the acronym is, it's an independent authority working on reporting in the EU. And the EU Commission mandated the EFRAG to propose a draft for the European standards. And that's exactly what they did. They did an interim draft report previously in 2022, and they came in November 2022 with their final report of the first set of European standards, We will have two different sets of European standards. This is only the first one, and just in a minute I will show you the other ones. So this is the final draft proposed by the EFRAG in November 2022. Now we are expecting from the Commission to come with its own draft delegated act. So these European standards will come as a delegated act of the directive and will be implemented like directly for the addressed companies. Some key aspects of this draft. So as you can see, it's not only about climate, it's about environment, but also about social and governance aspects. They really tried to work on the interoperability of these standards with other international standards, and we will detail that also in a minute. So they really worked with the GRI. Really, they work together with the GRI, but they also included the IFRS once it was more advanced. Between the two different drafts from the EFRAG, the IFRS progressed, and you can see the difference into the European, into the ESRS. If you compare the two drafts, the final one, you see that they really implemented, they really included all what was proposed by the IFRS. So they really try to make these standards interoperable with the other ones, and also the TCFD, because if you see the structure of the general disclosures and of some environmental standards, you really see the structure of the TCFD, that is governance, strategy, risks, management, and metrics. Another key aspects of these standards is the double materiality that is already included in the directive, but of course the EFRAG has not changed that. What is interesting to say is that into this final draft, the double materiality stays, and the approach to materiality is you have some mandatory requirements that you have anyway to disclose, and you also have some disclosure that you have to do only if they are material. So this is this double approach that the EFRAG took that is already different from the first draft they had, and that may also be different from what the Commission will come with. And this, I don't want to say any expectations, but there are some commentators that says that that may change with the draft from the Commission. Because now we are waiting for the draft from the Commission. So they may change this double materiality mandatory approach to go more into a complete materiality assessment. They may also come with some phase-in. What is expected is that the EU Commission comes with their draft early June. All of this has been delayed, and they should have already published something to be finalized in June. So they will only propose what would have been finalized in June and to be completely finalized by the end of August. So it's all a bit delayed, but this is where we are, and the EU is always a bit delayed. But it's something very important, so it's also good that they take the time to work on that. If we now have an overview of the different ESRS, so you see there are the two general standards on the left. Then we have some topical standards, environmental, social, governance, as I mentioned. And there we also have some sectoral standards to come. So it was expected in 2024, but the EFRAG and the Commission already say that this would be delayed because they really want to take the time to finalize the first set, which is the one on the left, before they start working on the sectoral standards. So we don't have any dates, but yeah, at some point it will come. So as I mentioned, for the general standards, all of this comes from the draft from the EFRAG, the final draft from the EFRAG. So we have these mandatory informations that are the general disclosure, so the ESRS 2, some EU legislations, and that refers mainly to the SFDR, the PIA that Núria just mentioned, and also mandatory informations are the E1 climate change and the S1 on workforce. And the rest is subject to a materiality assessment. What I already mentioned is the interoperability between the GRI, the ISSB, IFRS, and the TCFD. And also, if we look at the more social ones and the due diligence, we can say that it's also aligned with the UNGPs and the OECD. So there is no major differences. They really try to align with the international standards. Also important to say that the value chain is something important with the ESRS, and it's so for these general standards, most of the time it's only on operations, but the value chain applies sometimes, and it will come more with the sectoral standards, but it's still usually value chain. Then, so 5 environmental, 4 social, 1 governance. I will not go into all of this. What is interesting to mention is that it's not only climate, it's also social and governance, where some other standards like the TCFD really focus on environmental topic. And so it's really sustainability as a whole. And they, however, they really structured all of these standards as the TCFD does, like strategy, governance, strategy, risk management, and metrics. And for each of these standards, they define how to assess, the activities, how to give the metrics, etc., etc. So that's very, very detailed, and yeah. But let's see what the Commission will come as a draft. So some key steps for you for the implementation of the CSRD. So the EU Commission will publish its final ESRS by the end of summer, let's say, because they will issue like their draft in June. Then we will have 1 month of consultation. Then they will rework on the draft, and they will come with something final, where the Council and the Parliament then have to reject or accept. So all of this will take a bit of time, but the draft will come really soon. In the meantime, EU member states must transpose the directive. This is not completely independent, but member states have to transpose the directive. So this is the CSRD, and just like small flag from us that this transposition could bring some challenges in terms of harmonization, because a EU directive always set up like the minimum requirements, minimum scope, minimum requirements, and the member states can always go further than that. So let's see if some member states do that or not. That could be interesting moments. Into your company, what is important to do as first steps is to firstly decide who is responsible for the reporting processes, who will head all these reporting processes. Because you will have different choices. For example, if you want to do it as a group at the group level, or if you want to let all your entities do that, this is really a question that maybe a company based in Switzerland don't think she has to take now. However, even if you're a Swiss-based company, you could be addressed by the CSRD. And it's better to decide maybe now if you want to do it at the group level, or if you want to let all your EU entities start already, or if you already want to guide them doing that. Also, the assessment of the materiality is something important to do that you can already start. Maybe wait for the draft from the Commission, because this may change in the coming weeks, but you can start as soon as possible, and also to collect the data linked to that. So that was the CSRD and the ESRS. And if we now have a look at the other key standards and their interoperability, first of all, what we would like to say is that really we have a few international standards, but in the last few years, they really try to work together to grow together and to build something consistent with this, because they have like the same objective concerning regarding the non-financial reporting, and so they really want to work together to this objective. So what we have, so we have included some key steps between these different standards. So in 2018, we have the CDP questionnaire that was fully aligned with the TCFD recommendation. So these are some examples of how they work together. In 2020, we also have the two standard setters that oversaw the integrated reporting framework and the SASB that merged to form this value reporting foundation. And this value reporting foundation closely collaborated with IFRS in its creation of the ISSB. And so we have this value reporting foundation that announced it would merge with the IFRS. And similarly, we have this CDSB that was fully integrated into the IFRS foundation. And then the IFRS built the ISSB. What is also important to mention is that the GRI actively participated in the CSRD drafts. And some also say that the GRI is identified as a co-constructor that supported the EFRAG in its draft of the ESRS. Also the ISSB. So the ISSB is working on the revision of the SASB and the IFRS, a lot of acronyms. But I hope you have all of them. If not, just ask questions afterwards. We will have a Q&A, so feel free to ask all the questions that you have. So they opened the consultation on its proposed non-climate metrics for the SASB, and they will also finalize this revision before they issue any IFRS S1. Then we have the EFRAG. So now we have the European Financial Reporting Advisory Group. So that's the full name. That collaborated very closely also with the ISSB. So they collaborated from scratch with the GRI. And the moment the ISSB developed more its IFRS, then the EFRAG started to include that within its standards, but also the ISSB voted in 2023 to reference the ESRS in an appendix to the IFRS S1. So it's not only the EFRAG who really included the draft IFRS, it's also the ISSB who voted to also include the ESRS as an appendix. So it's kind of a reciprocity approach. And finally, the GRI is currently revising its standards, and he collaborates with all of these different standards, and most particularly the ISSB, the EFRAG with the ESRS, and the TCFD. So really, it's not a work alone progress. They really want to work all together, and especially the biggest one. So here you have like a summary table of these different standards, where we have included the proposed SEC, the US SEC. So in 2022, the US SEC proposed to have a climate reporting requirements for US companies. And so they are finalizing the final rules that was open for consultation until end of 2022, and now they say they would finalize by April 2023, but nothing has been published. So we are also waiting for that. It's not a standard, it's a reporting requirement. You see some are voluntary, like TCFD, ISSB, or the GRI. Some are mandatory, like the ESRS, that will be really mandatory if you want to comply with the CSRD, and the SEC, of course. Some are already implemented, where some are in progress. The ISSB is still in progress. We are waiting for some things to come already in June, and the SEC, we don't have any specific dates now. Audits sometimes are required, sometimes not, like in the TCFD and ISSB, where, as I mentioned, the CSRD requires it. Also the SEC in the initial draft and the GRI. The approach to materiality is also not the same, and this I will detail quickly in a minute. And where to report, they all have their own definition on where to report. So if we go to the materiality point, you can see that this is an important point, and this is a challenging point, I know, for companies. Which standards has which definition of the materiality? So what we can say, we have this financial materiality, that is, what is the impact on the sustainability issue to the financial aspects of the company, and the impact materiality, that is, what is the impact of the society to the sustainability issues, or to the society as a whole. And if you have these two aspects of the materiality, if you merge them a bit, you have in the middle the double materiality, where companies have to report these two aspects. So what is the impact on the financial materiality, and what is the impact of the company to the society? This double materiality approach has been taken by the EU, as I mentioned before, with the CSRD and ESRS, and in Switzerland with the Ordinance on Climate Disclosures, where Guillaume will explain in a minute, where the ISSB with the IFRS stayed with the financial materiality. And this is one of the key challenges in this interoperability of the different standards, that you have the CSRD, ESRS, the EU, that is really double materiality, where the IFRS stays financial materiality, and the GRI, as you see, is impact materiality. So they have each their own approach to materiality. So the GRI has like a broad approach to the impact materiality, but it's still an impact materiality. And so the EU had to work with these two different approach, but to also stick to this double materiality and to make all of this interoperable. So it's a bit of a challenge, but they really try, and somehow we could also see the links between the two, but the basis of the approach is not the same. Also, the SEC really stick to the financial materiality, and is very aligned with that, with the IFRS. TCFD is also financial materiality, but some metrics can also be used to assess the impact of the company. So it's also a broader approach than the IFRS. Yes, and finally, some key points on the outlook, key steps. So as I mentioned, so we are still waiting for the ISSB to issue the final version of the IFRS S1 and exposure draft IFRS S2. That will be by the end of the Q2 2023. What I already mentioned quite a few times now, that we are waiting for the initial draft from the EU Commission for the ESRS. It will come early June. We don't know also when the SEC will propose its final rule for the climate disclosure. And in Q3, we also expect the revision to the GRI biodiversity topic to be finalized. Also, by the end of 2023, we expect the GRI human rights specific topic to be revised, and the TCFD will also prepare a progress report on companies for climate-related disclosures. In 2024, we expect the CSRD requirements to be transposed by member states, and that will become applicable to the first company addressed by the CSRD. We also expect the GRI sector program to develop some standards for 40 sectors, and the IFRS S1 and S2 to become applicable, effectively applicable in 2024. So really 2023 will see the finalization of this IFRS. And we also don't know when, but we expect the proposed climate-related disclosures to be adopted in the US. So that was it with these different non-financial reporting standards, and especially the EU one. And now I will give the floor to Guillaume for the Swiss part.
Thank you very much, Núria and Tennessee. After this rather technical EU trail, I suggest we take a quick walk back in Switzerland. So today I'll speak briefly about the Ordinance on Climate Disclosures, the OCD. Where do we come from? Well, if we can switch to the next slide, please. It all boils down from the Code of Obligations, the CO revision of 2020, which is in force since January 2022. So this modification introduced Article 964A, and Sequitur of the Code of Obligations, which led the Federal Council to enact the Ordinance on the Climate Disclosures, the OCD. Just a quick reminder on the principles. We have three main principles, which are cumulative. So this only concerns company of public interests, as defined in Article 2, letter C of the Auditor Oversight Act. This only concerns those companies of public interest which have a 500 full ETP and that have a balance sheet of either 20 million Swiss francs or sales revenue amounting to 40 million Swiss francs. So if those three conditions are fulfilled, then you must disclose. There is an important exception, however. This does not apply to undertakings that are controlled by another undertaking that must prepare an equivalent report under foreign law. So that's for the people who are concerned by this. To the report, so this is Article 964B of the Code of Obligations. We have seen, so who was concerned by the OCD now? What has to be done? Well, according to this article, a report has to be published and has to cover particular environmental matters, in particular CO2 goals, social issues, employee-related issues, human rights, and combating corruption. Furthermore, and we can switch to the next slide, thank you. Furthermore, the report should contain information required to understand various other topics, such as the business performance, the business result, the state of the undertaking, and the effects of its activity on non-financial matters. Let's switch to the more international side. So if the report is based on national, European, or international regulations, and the law specifically addresses the principles laid down by the OECD, well, then it must be ensured that all the requirements of the Code of Obligations articles are met. Shouldn't it be the case? Well, then a supplementary report must be prepared. There is also a paragraph on the language of the report, which can be a Swiss national language or English. Now let's go to the OCD itself. What's the scope of the OCD? Well, it's a very light ordinance, which is obvious since it implements an article of law or 3 articles of law of the Code of Obligations. So its subject matter is to govern disclosures on climate issues in accordance with the Code of Obligations, and also the disclosure to be made in accordance with the framework of non-financial matters. we can switch to the double materiality. Núria and Tennessee spoke about it earlier. Well, no surprise there. The Swiss take also the double materiality concept, which in practical terms means that the climate issues include two sub-concepts. It has the effects of climate change on companies and the effect of companies' activities on climate change. Now let's go to the disclosure obligation compliance, which is stated by Article 2 of the OECD. The main principle, as always, is the main motto is comply or explain. So basically you have three scenarios. The first one is that you are compliant with Article 3 OECD, and that stops there. Otherwise, you are compliant in other ways. In that case, you have to demonstrate how you are compliant with the disclosure. And the third case is that you're not compliant. And then in this case, you have to justify why you're not compliant. So what are really the climate disclosures based on Article 3 OECD? Well, unsurprisingly, they are based on TCFD's recommendations. So we have the 11 TCFD's recommendations, and they cover, as you all know, 4 key areas, which are governance, strategy, risk management, and key figures and targets. The implementation is governed by the same article, Article 3 OECD. So the implementation of the 11 TCFD recommendations must take into account the cross-sectoral guidance, sector-specific guidance, and at last the guidance and metrics, targets, and transition plans. Sorry. Regarding the strategy, just a deep dive on that sole strategy. It has to include a transition plan, which has to be comparable with Swiss climate goals, and if available, information in quantitative form. Obviously, all of this is made to be public, so it has to be published in accordance with the articles of the Code of Obligation. The electronic publication is possible, and the commentaries of the Federal Council on the OECD goes a step further, since the report has to be accessible on the website of the company. As always, this ordinance comes with a transitional provision, so the obligation to publish shall be met at 1 year at the latest after the OECD enters into force. The OECD should enter into force in January 2024, which that means that the obligation to publish will start January next year in 2025. I think you will receive the slide deck shortly afterwards. I have all the links here for you in English, German, and French. English when available. I think that's only, no, it is only for the ordinance itself. With that, there was a very quick overview on the Swiss ordinance on climate disclosures. I thank all of you, and now we switch to the questions and answer. I think we'll be back with ECOFACT in October. That has to be defined yet, but there is plenty of material. So I think we'll see everyone again for another webinar for series after the summer break. Thanks a lot, Núria and Tennessee. It's always great to have you on board. Thanks to you all, and have a very nice day.